Development Pharmaceuticals in association with Higher Secondary Principals Forum.
Hi everyone, welcome to the concluding session on this dissolution of partnership form. Students, in the first session I just explained you all the concepts of dissolution of partnership form, that is, what is dissolution, how and when the firms are to be dissolved, if the firms are dissolved, how to settle the books of accounts. So, that is what you learned in the first session. It was completely theoretical. In the second and third session, we solved the practical problem to understand the procedure to be followed to settle the books of accounts on dissolution of a partnership form. Now, in this concluding session, instead of solving the entire problem, just I want to explain to you all how to make some adjustments in respect of some typical adjustments. To start with, I given the situation 1, where A and B were partners sharing profit and losses in the ratio of 3:2. Show how we will treat the following items at the time of dissolution. That is, 1, workmen compensation fund stood at rupees 10,000 in the balance sheet, and there is no liability in this respect in the adjustment. Students, sometime you come across a problem where you find only the workmen compensation fund in the balance sheet on liability side, but you do not find any information about workmen compensation fund, or there is no claim. So, when there is no claim, how to treat this while settling the books of account? So, in this case, since there is no what you call liability on account of workmen compensation, that whatever the rupees 10,000 is there, that money should be distributed among A and B in the ratio of 3:2. So, when you distribute it, it comes in partners capital account on credit side as by workmen compensation fund, in A's column rupees 6,000 and in B column rupees 4,000. Okay. So, this is what you have to do when there is no additional information given in the problem as far as the workmen compensation fund is given. So, this is 1. Now, coming to the second situation, suppose workmen compensation fund stood at rupees 12,000 in the balance sheet on liability side, and in the adjustment you are given that the workmen compensation liability on account of workmen compensation fund is estimated or ascertained at rupees 7,000. So, how to do this? That in the balance sheet liability side you have rupees 12,000, but your actual liability came to rupees 7,000. So, in the realization account credit side you have tried that rupees liability what is the 12,000 and you have to pay on the debit side of your realization account rupees 7,000. The difference amount, that excess amount should be distributed among the partners in their profit sharing, that is 5,000 should be distributed among the partners in the ratio of 3:2. So, this is how you have to adjust if the claim is less than what the provision you have made. Now, coming to the third situation, workmen compensation fund stood at rupees 12,000 and liability in respect of it was ascertained at rupees 15,000. That means, in the problem you will find workmen compensation fund of rupees 12,000 on the liability side, but in the adjustment it is rupees 15,000. Actual liability is more than what the provision you have created for. So, how to adjust this while settling the books of accounts? So, here when you transfer the liabilities, you have to transfer that workman compensation fund of rupees 12,000 in the realization account on credit side, and when you make the payment on debit side, you have to write workman compensation of rupees 15,000. So, here we are paying more than what the provision we have created for that. So, this is how we have to adjust it. Now, situation 4, there was no workman compensation fund and firm had to pay rupees 3,000 compensation to the workers. So, here there is no workman compensation fund balance in the balance sheet on liability side. Okay. Afterwards, some worker must have got injured and the liability came to rupees 3,000. So, what is to be done? So, here whatever the workmen compensation fund you are paying rupees 3,000, that should be debited to realization account along with other recorded liabilities. So, this is nothing but it is unrecorded liability. So, I am repeating this again. In the balance sheet liability side, there is no workmen compensation fund at all. When there is no workmen compensation fund, the question of transferring to realization account on credit side does not arise. But when you pay for the recorded liability, you have to pay for this also, considering that it is an unrecorded liability. So, this is how you have to adjust this while settling the books of account on dissolution of a partnership firm. Now, let us go to another situation. Okay. L and M were partners in a firm sharing profits in the ratio of 2:3. Show how we will treat the following items at the time of dissolution. So, the situation 1 or adjustment 1, a creditor for rupees 1,40,000 accepted building valued at rupees 1,80,000 and paid to the firm rupees 40,000. Means sometime you find creditors balance of rupees say 1,40,000 on the liability side of your balance sheet. As you all know, creditor is an unrecorded external liabilities. So, to close that we transfer to realization account. When you transfer to realization account, it appears on the credit side under the heading of sundry liabilities, that is 1,40,000. Now, these creditors, they have taken building of rupees 1,80,000. Actually, the creditors were of rupees 1,40,000 only, but they took building of rupees 1,80,000, which is more than the amount due to the creditors by rupees 40,000. So, whatever the money you are receiving, that excess money you are getting from creditor, that should be shown in the realization account on the credit side for the assets realized right by bank account. So, there you have tried building account, that is building realized is rupees 40,000. So, in the realization account credit side, while transferring the liabilities, transfer creditors at rupees 1,40,000, but while making the payment for liability, do not make the payment for the liabilities. So, when you normally you make entry for the payment of liabilities on the debit side of realization account. So, here for creditor there is no need for you to write, that is to bank creditors and all, but only thing is, since the value of building taken over is more than the amount due, that whatever the extra money 40,000 you are getting from the creditor, that should be shown as assets realized in the realization account on credit side under the heading of bank. Okay. So, this is the entry for the assets realized from building. So, this is what the adjustment for this. Now, coming to the second situation, a creditor for rupees 30,000 accepted machinery valued at rupees 28,000 in full settlement of his claim. Means sometime you will get sundry creditors in the balance sheet liability side for rupees 30,000, you are supposed to pay 30,000. You close this creditors account by transferring to realization account. When you close and transfer to realization account, it comes in the realization account credit side under the heading of sundry liabilities, creditors rupees 30,000. Means we have to pay 30,000, but they took machinery valued at rupees 28,000 in full settlement. So, they are happy with that machinery of rupees 28,000. So, you need not pay them. So, for this, when you make the entry for the payment of the external liabilities, you need not write for creditors paid. So, it will not come on the debit side of realization account. So, this is the situation 2. Now, suppose a creditor for rupees 70,000 accepted 30,000 in cash and investment of the book value of 45,000 in full settlement of his claim. Suppose there was a creditor for rupees 70,000. That means you will find in the balance sheet on the liability side creditors rupees 70,000, means we are supposed to pay 70,000 to them. Okay. They accepted rupees 30,000 in cash, 30,000 in cash, and for the balance amount, out of 70,000 you are paying 30,000 rupees cash, means still you have to pay 40,000, but in settlement of that 40,000 they took investment worth rupees 45,000 in full settlement. So, how to adjust this? As usual, when you transfer the liabilities to the realization account, write on credit side as by creditors or under the heading of sundry liabilities, creditors rupees 70,000. When you make the payment to the external liabilities, on the debit side of your realization account, creditors must be written only 30,000 rupees. Okay. So, creditors paid will be only 30,000. So, this is how you have to adjust as far as the third adjustment is concerned. Now, let us move to the next one, that is investment fluctuation fund amounting to rupees 15,000 was appearing in the liabilities, whereas investment of rupees 35,000 also appear in the balance sheet on asset side. That means, you find investment fluctuation fund in the balance sheet on liability side for rupees 15,000, and on the asset side of the balance sheet, one of the asset is investment rupees 35,000. So, this type of assets are called valued assets or contra assets or link assets. How to adjust this while settling the books of account on dissolution of a partnership firm? Along with other liabilities, you close this liability account by transferring to your realization account. It comes under the heading of sundry liabilities, credit side by sundry liabilities. Under that heading you have to write investment fluctuation fund rupees 15,000. Okay. Now, that investment is there. So, because that investment is there, you should not distribute it among the partners in their capital account in their profit sharing ratio. Okay. So, this is what that investment fluctuation fund you just transfer to your realization account on credit side under the heading of sundry liabilities and just forget. So, that is the only thing. So, you need not do anything more than this. Now, coming to the situation 2, suppose investment fluctuation fund amounting to rupees 12,000 was appearing in the balance sheet on liability side, whereas no investment appear in the balance sheet on asset side, and the partners were sharing profit and losses equally. So, if this is the situation, how to adjust it? Now, here what you have to do is, since there is no investment in the balance sheet asset side, that investment fluctuation fund you are not supposed to transfer to realization account. It will not come under the heading of sundry liabilities. Investment fluctuation fund you have to transfer to realization account only if there is the contra entry on the asset side of the balance sheet. So, in the second situation, there is only the investment fluctuation fund appearing on the liability side of your balance sheet, but on the asset side there is no investment. So, in this case you need not transfer this investment fluctuation fund to realization account on credit side. What you have to do is that whatever the investment of rupees 12,000 is there, that should be distributed among the partners, that is A and B, in the equal ratio. That is, when you distribute rupees 12,000 among A and B in the equal ratio, it comes in the partners capital account on credit side as by investment fluctuation fund rupees 6,000 in A's column, rupees 6,000 in B's column. So, what I am trying to say here is, when there is contra entry means when the investment entry comes both on asset side as well as liability side, then only that investment fluctuation fund should be transferred to your realization account on credit side. Suppose if there is no investment in the balance sheet on asset side, so there is no need for you to transfer it to realization account under the heading of sundry liabilities. Instead of that, directly have to distribute it among the partners in their profit sharing ratio when you distribute, it comes on the credit side of partners capital account, on the credit side as by investment fluctuation fund rupees 6,000. So, this is the case as far as the investment fluctuation fund is concerned. You have to see whether it is a contra entry or not, contra what you call asset. Contra asset means you will find that is on both the side, asset side as well as liability side. Now, let us consider one more situation, that is one more adjustment, typical adjustment. If Amit, a partner, has advanced a loan of rupees 40,000 to the firm and his loan account is settled at rupees 36,000. You are supposed to pay 40,000 to partner, that is Amit, but he took 36,000 only in full settlement of his loan account. So, when he take only 36,000 which is less than 40,000, the difference of rupees 4,000, instead of paying 40,000 you are paying only 36,000, that means the firm is benefited to the extent of rupees 4,000. So, whatever the money you are saving, that you have to credit it to realization account on credit side as by Amit's loan account rupees 4,000, by Amit's loan account rupees 4,000 in the realization account on credit side. So, in Amit's loan account, as you all know, Amit's loan is a liability. So, all liabilities have credit balance. So, credit side you are writing by balance brought down rupees 40,000 and you are paying 36,000 means cash goes out is only 36,000. So, Amit's loan account debit to bank account only 36,000. So, 40,000 36,000 means there is a difference of rupees 4,000. So, how to close it? You close it by transferring to the realization account. So, when you suppose that is Amit's loan account is there, okay. As you know, all the loans have the credit balance. So, on credit side there is by balance brought down, it is rupees 40,000. You were supposed to pay 40,000 to Mr. Amit, but he is taking only 36,000. So, you are paying him only 36,000. So, to bank account 36,000. Now, see credit side is, it is rupees 40,000, on the debit side is only 36,000 means there is still the balance of rupees 4,000. This is closed by transferring to realization account. So, realization account. When you transfer to realization account, the entry will be Amit's loan account debit to realization account, to realization account rupees 4,000. So, when you post it, it comes in realization account credit side by Amit's loan rupees 4,000. This 4,000 becomes a profit to the firm. So, this is how you have to adjust this. Now, coming to the one more item, that is Mr. Chetan, a partner who has advanced the loan of rupees 10,000 was discharged along with accrued interest of rupees 200 not yet recorded. Actually, we were supposed to pay Chetan rupees 10,000, but we are paying back to him along with interest of rupees 200. So, the entry in this thing will be that whatever the 200 rupees extra you are paying, that should be, it is a loss to the firm, that should be debited to realization account. So, in realization account you have tried to Chetan's that is loan account rupees 200. If you are paying less than what you are supposed to pay to the partners, the difference amount comes on the credit side of realization account. Suppose if you are paying more than what you are supposed to pay, the difference amount comes in the realization account on debit side, because that 200 what you are paying is loss to the firm. So, that loss all the partner has to bear it. So, because of that we debit it to realization account. So, that is you have tried in realization account on debit side as to Chetan's loan account rupees 200. So, this is what. Sometimes students, you will find some typical adjustment, like for example, bank overdraft. Suppose if there is no bank balance on the asset side of balance sheet, so that bank overdraft you should not transfer to realization account on credit side. So, instead of that you can write in the bank account as by balance brought down. Bank overdraft is a liability. So, if the bank balance is given on the asset side, normally we write as to balance brought down because it is an asset. So, bank overdraft is given on the liability side. So, there is no bank balance in the balance sheet asset side. Under such circumstances, when they ask you to open the bank account you have to start with the that is overdraft balance, which comes on the credit side as by balance brought down, that is overdraft amount you have to write. Now, one more situation, suppose bank overdraft is given on the liability side of a balance sheet, and in the bracket they say charge on so and so asset. When there is a charge on so and so asset, you have to transfer to the relation account on credit side under the heading of what? Sundry liabilities. So, this is what you have to do as far as bank overdraft is concerned, if there is a charge on on any assets. Now, one more thing is, normally we come across in the balance sheet either cash in hand or cash at bank, but sometime you may find both cash in hand as well as cash at bank. So, if you are asked to prepare bank account, that whatever the cash balance is there in the firm, that is cash in hand or petty cash, that amount should be deposited into the bank. So, how to show it in the bank account? So, in bank account, to balance brought down, whatever the cash at bank is given in the balance sheet, that you have to write it. Now, whatever the cash in hand is there, that amount you have to assume that it is deposited in the bank. When you deposit in the bank, the entry is bank account debit to cash account. So, first you start your bank account with to balance brought down and write your bank balance. Then whatever the cash is there, you have to assume that cash is deposited in the bank. When you deposit in the bank, it comes on the debit side of your bank account as to cash account. So, this is how you have to do it. Suppose if they ask you to prepare cash account, it is other way. So, first you write to balance brought down, that cash balance, then that whatever the amount is there, you have to assume that money is withdrawn. Okay? So, when you withdraw it, cash comes into the business. So, debit what comes in, credit the giver. So, banker is the giver. So, in cash account to bank you have to write that amount, whatever the bank balance is there, that amount you have to write. So, this is how you have to settle the books of account on dissolution of a partnership firm. So, this is what you have to learn as far as the dissolution of partnership firm is concerned. Okay, students. So, this is how you have to settle the books of account on dissolution of a partnership firm. So, I finished all the aspects of your dissolution. So, whatever I could do within a specified period of time, I tried my level best to give you the maximum information. So, with this I conclude this chapter. Okay, with this session comes to an end. Thank you.
Prudent Scholars, powered by Lupin Pharmaceuticals.